And as announced, we have in front of us two country perspectives, and we will start north of us in Norway. It said they have a streamlined regulatory system adopted already some time back, and we will have some of that. Ms. Nyland is head of the Norwegian Petroleum Directorate and has been since 2007. A geologist, welcome and thank you for being here. A geologist by training, also previously employed by Statoil, so she knows also the business. Serves on a number of boards, including those of the Norwegian Geotechnical Institute and the Norwegian Institute for Energy Technology. Ms. Nyland, we're very happy you're here. You have 15 minutes.
Thank you so much for the good words, and thank you for inviting me to this year's Oil and Gas Summit. And for me, the program reflects what is on our mind of all of us present here, the future of our industry. The current situation gives rise to many challenges for the activity, and we see it in Norway and we see it in other places. Projects are being postponed, rigs are being laid up, important investments are being delayed, expertise is stagnating, and the consequence for recruitment over the longer terms are under pressure, and decisions are becoming short-sighted. The question is then, what lies within the scope of the authorities to deal with, and what needs to be left for the industry to itself to solve? First of all, a few words about the NPD, and you need to understand our goal to see what we are working for. We are a governmental agency established in 1972, reporting to the Ministry of Petroleum and Energy. Our mission is to contribute to the greatest possible value for the society from Norway's oil and gas activities. And our most important job, and in particular during periods with low oil prices, is to be a driven force to ensure a high exploration activity to continue, that planned reserves are being produced, that necessary wells are drilled to increase the recovery, and that new discoveries are developed and put on streams. And NPD is in a unique position because we can see the total resource situation across all production licenses and try to seek solution by that. And with NPD's role in mind, I would like to talk about the situation we saw around the turn of the century, after a situation that might be similar in many ways with the situation we have today. It was a period after that the oil price has been down to $8 barrels. The exploration activity was decreasing, and we saw the lowest number of wells drilled in 2004. The low exploration activity was the result of restructuring of the industry after a long period of low oil prices, as said, mergers and acquisition among the oil companies, which left Norway with fewer active companies. The result of a low exploration activity was less discoveries and, of course, a low resource growth, reflected by the figures here. And we also saw that the remaining companies was not interested in exploring in the mature areas due to the materiality in the area. The authority saw something had to be done, and different regulations changes were put in place. In 2000, provision was made to admit new companies to Norwegian waters, and a pre-qualification system for operators and licensees was introduced. The aim was to make it easier for newcomers to secure access to acreage. Annual licensing rounds was introduced in the mature areas, And, as mentioned by Woodmac, a new taxation principle was introduced by the Parliament in 2004, which gave companies with a tax loss a right to annual refunding of the tax value, not 80, 78% of exploration costs with effect from 2005. That really boosted the activity, as you see on this figure. A substantial increase in the number of companies from just below 30 in 2000 to more than 50 in 2010, and an increase in number of exploration wells from 12 in 2005 to 65 in the top year 2009, and last year 57 exploration wells were drilled. In addition, of course, many new discoveries, including the discovery of over 2.4 billion barrels oil equivalent Johan Sverdrup field, discovered because of recycling of acreage through these annual awards, and I also must admit, introduction of new technology on the seismic side. Now the petroleum industry again is facing challenging time, and after a long period, the growth is now coming to a fairly sudden end. There are substantial resources remaining on the Norwegian shelf, and they can provide a foundation for a profitable industry to many years to come. However, as mentioned, a high cost level combined with a significant decline in oil price poses challenges. That is why it is important that the industry, and by that I mean oil company and the supply industry, work together. Work together is a word that has been mentioned earlier, to do something about this high cost level. We have capital restriction, but it must not halt what we call time-critical profitable project, and existing infrastructure must be safeguarded. By that I mean platform pipelines and onshore facilities. A short-term focus on profitability can be in a stark contrast to good long-term resource management, which is the picture of the Norwegian shelf, actually. This map shows the Norwegian shelf with areas open for petroleum activity in green, as well as areas that has not been open for petroleum activity. And as this figure illustrates, the cake figure shows that we have produced approximately 45% of the total expected petroleum resources. This means that more than half of the oil and gas resources in Norway is still in the ground, and around 20% of these has not yet been found. The size of the undiscovered resources is very uncertain. They could be smaller than we expect, or they could be substantially larger. And the largest uncertainties is linked to the Barents Sea, opened as early as in 1980, but with large areas still unexplored. And the role of the authorities into all to this is one word: it's predictability. Annual licensing round in mature areas and biannual licensing round in frontier areas. It will be exciting to follow the 23rd licensing round and the subsequent exploration activity in the Barents Sea Southeast, which is a new area that was opened after the finalization of the negotiation with Russia on the borderline. And which is the first new area that has been opened for petroleum activity on the Norwegian shelf since 1994. And the resource pie, as you see, it is the foundation and the basis for our production forecast. Here we see the last 5 years production oil and gas and our forecast up to 2030. And as you see, if we do as we expect, the production will flatten. Over the next few years, production will come from current fields in dark blue, but this prognosis is dependent on implementation of plans for enhanced production on the resources in these fields. In the years to come, more and more production will come from fields that are now under development or in the planning phase. On the longer term, the production forecast depends on the discovery of new resources shown in the light blue colors. Investments are needed to establish and maintain high production. It is important to invest in the existing fields. It is not the case that everything runs by itself as long as production has started. We must invest in technology. Use of technology has contributed to extend the lifetime of major fields as Ekofisk and Statfjord. Discoveries near existing platform and pipelines can easily and relatively inexpensively be developed and tied into the existing infrastructure. This means better utilization of the existing infrastructure and assure extended field lifetime. 20 fields that was expected to be closed in by now, only 6 has been is closed. The remaining is still producing and doing well. Norwegian subsea technology has made this possible. That is why it is important to maintain platform, pipelines, and facilities. We have now some 100 discoveries to be developed in the pipe. Some are non-commercial today. We have made it earlier, been able earlier to move uncommercial into commercial fields, but most of these 100 discoveries are subsea tieback to existing infrastructures. But this demands considerable investments on the Norwegian shelf in the years to come. Up to 2014, the petroleum activity experienced a long upswing with high oil and gas prices and eventually also a high cost level. This caused the oil company to start restricting investment and postpone projects, a trend which was further reinforced when the oil prices dropped significantly at the turn of the year. How this will extend or develop in the short term is uncertain, but we expect a decline in investment over the next few years. Some might say that we are now returning to a more normal investment level as it was before the boom in 2012. For the next couple of years, investment on operating fields are the main uncertainty factor, followed by decision on new field developments. The most important activity on operating field is drilling of new production wells. If these wells are not drilled, production will fall and resources could be lost. However, there is little doubt that the activity on the Norwegian shelf will remain high for the next 20 years. And this means that we still need fresh new mines to replace personnel currently in their 50s. That is also why it's disappointing to see that the cuts made by the company once again drive young people away from the engineer studies. This year, it is 50 years since the first blocks were awarded on the Norwegian shelf. This is the hand-colored map from 1965. Our greatest concern now is that the companies are losing sight of that this is a long-term perspective that need to be made, and that they are now making decisions that are short-sighted. We see that a number of profitable projects are not profitable enough for the companies, but it is for the society. It is for the society. We are particularly concerned about the so-called time-critical resources, which largely means resources that depend on the lifetime and the presence of existing platform and pipelines for development. If we don't make these into production, they are lost. And we don't like to see that resources and assets are lost, and that is why we in the NPD is putting pressure on the companies not willing to develop these resources. So in conclusion, I repeat that there are substantial remaining resources on the Norwegian shelf. These resources provide a foundation for a profitable industry for many years to come, but it requires decision with a long-term perspective. So thank you for your attention.
Thank you very, very much. Very thought-provoking, and in a minute I will ask you to take a seat here with Mr. Tolan after the British presentation in a minute. But just one question. If I understand you correctly, the analysis is there is a lot of challenges ahead. The lower oil prices is making investment decisions harder within the industry. You have a recruitment issue now, which is, I think, dear to many people in this room, including the young people who came to me during the coffee break and asked me to take this up in particular. They find no positions for their aspirations and ambitions. So, why is it the Norwegian government seems to stick to a regulatory system that was successfully introduced in 2008, but is now perhaps not really up to the job?
I will not say that we will not do anything with the system in the time to come, but so far, what is the success of a country? Well, all the companies are present still. They have been challenging us on the taxations. Every time the oil price is low, we got the challenge of, you have to do something with the tax. But then things turns around and then everything is silent for a very long time. But it's predictable. So you know what you are investing and you know what your return is.
That's one way of being predictable. Yes, certainly.
Yes. And you can challenge our Ministry of Finance. They don't like to change the taxation system.
I bet not. I bet not. So let us stay with that for the moment. I think the message is very, very clear. Thank you very much.
Thank you.